Matt Garcia on with us so that we can talk a little bit about real estate.
There we go. Can you hear me?
I can.
There we go. Got it to work now.
We said we're in real estate. We're not in tech, so we are finally here. So
We need
it
to
is.
hire more nerds.
I know, right? So it's good to have you on.
Pleasure to be on.
Yes. So I'm just coming back off of vacation for almost 2 weeks and celebrating my birthday. So went to Thailand.
Well, happy
And
birthday.
thank you. I had a wonderful time. So now I'm still trying to get my sleep patterns back on because of the 11-hour difference.
That might take a minute.
Yes, so I'll take a nap during the day and I wake up at 1 and 2 o'clock in the morning, and then I'm up all day long. So I got to get back on United States time zone. So for those who are watching, just wanted to introduce Matthew Garcia. Matt and I have been working together for over a decade. He is my preferred lender. I love him because he works just as hard. He works harder than I do. And so
we all work equally hard here.
so it's, I just want us to have a little conversation about what's going on in the real estate market right now, because there's a lot of misconceptions about things. And so, Matt, I just want you to kind of take it away. And if anyone has any questions, we'll be happy to answer any questions that you may have.
Sure. Well, the biggest thing I think we see the misconception right now in the market is that people think it's a bad time to buy because interest rates are so high. And what I have to tell folks and have to make sure they understand is that when you look at how money has worked over the last 10 years, where the market had declined so much due to the market crash, rates had to be cheap to bring people back into the market. Well, all of a sudden, when you went from the market crash, where really a lot of people shouldn't have owned a home back then, and that inventory opened up, well, all of a sudden now we get down the line where all of the next generation of the millennials and so forth now have money that they can actually go out and afford houses. Well, all the people that had gone through the crash and lost their houses have recovered financially and are back in the market too. But the inventory never really improved over what was already there. So what you have right now for the last few years that everyone, their mom jumping out to try to buy houses in a very rough inventory market. But because of the rise of interest rates from after COVID, we went the lowest rates possible. Now we've gone to inflation rates being 7%. Most of the market, people that can afford to buy houses are locked out of homes, which makes for a very unique opportunity. And the unique opportunity is, yes, you might be paying a little bit more on the rate side of scale, but you have few people competing against you. If we look at one the clock back even a year and a half ago, any decent property had 15 to 20 buyers bidding on it. Nowadays, you might only have one or two. That's opportunity. And the one thing people are like, well, that means their housing might decline again. It's not going to decline because you have 5 million people right now that still need to buy a house that can't. Right. What's going to happen is that interest rates are eventually going to fall next year once we go more into a recession. And we get that recession, those folks, when those interest rates fall back into the fives and so forth, are going to gain about 150 grand to $200,000 of buying power. What are they going to do with that buying power? Get back out in the market and then go compete against each other and drive prices back up higher. So if the opportunity now is if you can get in while the getting's good, you're getting a house for a much better price with concessions and so forth. Then when the market comes back down and rates recover, you're going to refinance, but then not go compete against all these other buyers driving your price up.
Exactly, because Matt, you and I, we closed one about a month ago.
Yep.
Where she didn't have a whole lot of money. And so we were able to get the seller to give $10,000 in seller concession toward closing costs.
Yep.
And then the house appraised $8,000 higher.
Yep.
So then we turned that, we upped her part that she was financing, and we, rolled in the additional $8,000. So instead of her getting $10,000 in seller concession, she got $18,000 in seller concession.
Exactly. And then on top of that too, her house will appreciate more. So she got to basically buy a house where money was given to her to help her buy this property, which is something we haven't seen in so long.
Right.
And that is just a rarity right now, but it's a small window of opportunity for those buyers that don't realize, like, it's not cheap to buy a home. Not only have your down payment to contend with, you have closing costs on top of that. And if the seller can take those closing costs off your plate, that's a lot of money you save off of that, not have to outbid someone too for that home.
Correct. And the thing about it, like right now, I have two properties that are for rent, and one we just leased out for $29.50 a month, a 3 bedroom townhouse, and we have another 3 bedroom townhouse that is at $2,600 a month. I mean, my mortgage is not that much, and so it
Exactly.
makes sense. I mean, landlords are capitalizing on the rental market right now,
Yep.
but there's no reason why someone who used to pay $1,300 a month on a place, that same place they're now paying $1,700 a month, when they
Exactly.
own a home.
Exactly. And we look at the benefits too, just going down the line of what it means to own a home. Not only do you own the asset now, so you now are that owner, you're putting money into your home every month with every monthly payment you make. Your home is going to appreciate in value every year that what you own it. And on
Right.
top of that, there's tax incentives. The government subsidize us owning homes. So if you are renting, you get zero tax incentive for for renting that property. When I own, the government's going to pay me back because I'm writing off my mortgage interest, other parts of my income that I can write off, property taxes. All of a
Right.
sudden now, by owning a $350,000 home, the government's going to incentivize me another probably $5,000 or $6,000 in tax savings back to my pocket from Uncle Sam every year from the IRS or more. And that's
Exactly.
the beauty of the ownership, is that I'm being paid to own this property, and I'm also increasing in value every year with that. So that's a win-win. Whereas if I rent, I get nothing.
Right. Right. I mean, and it just really makes sense because I have a listing right now. I think she bought it 2.5 years ago.
Hmm.
There's probably about 75,000 dollars worth of equity in there. Once she pays something towards closing costs, she's going to walk away with about $60,000. And so for a $20,000 investment that she made 2.5 years ago, if that $20,000 had been sitting in an IRA, had been sitting in her money market account, savings account, or whatever, there's no way that she could turn $20,000 into $60,000 in 2 years. I mean,
Exactly.
it makes sense. And most people who have been in their house for a very long time, even like me, my house, no, my value of my home has more than doubled of what I purchased for it. Now, I can't move anywhere because I gotta stay where I am. But if I chose to move or what have you, then you're talking, a couple $100,000 worth of money, worth of equity that you can have. And what some people have been doing is when they have that equity in the home, even if they don't have a place to go right now, they're finding temporary housing,
Yep.
and then, getting that money, because if something happens to the market, if there's some type of crash or something that comes on later on down the line, then you're not going to be able to get that money out.
Exactly.
And so, you need to get it out, put it in a savings account, put it in a money market account,
Yep.
hold that money or what have you. But it's definitely a good thing to own. And the other thing too, which I definitely don't feel like we're going to ever have anything that happens like with COVID. But the good thing that happened with COVID for homeowners, a
Yep.
lot of mortgage companies, they were giving relief where
Hmm.
you didn't have to make a mortgage payment. When you were renting, you had to
Hmm.
pay
Yep.
that landlord, or you had to pay the rent, or either later on you got to move out. But for owners, even for myself, my mortgage company automatically gave me 1 year of not having to pay the mortgage. And then they tacked it on to the end of the
Yep.
loan at 0% interest.
Yep.
And so I had that money, and it's like, okay, do I pay it right
Yeah.
now, or is that 0% interest,
Yeah.
or just let it ride? And
Exactly.
so then I was able to renovate my house and do some things with the money that I was able to save during that process. And so, and a lot of people didn't know that. And I wish we could have done a live or something back then.
Yeah.
For some of the people who even own homes, to know that there was some type of relief that you could get from being a homeowner
True.
versus renting.
You hit a lot of key parts there, because what you look at, the government cares about people who own. Now, people who rent, I hate to say, they're not in the same category. And that's the one thing, is that if you do own it, we saw the government learned its lesson from when the market
Yeah.
crashed back in '07.
Yep.
and they're not going to repeat that again. And that's why even people say like, well, the market can still crash or it can still go down. It's not. The government's not going to let it happen because, again, you're not going to let what happened before because it's bad politics. They're going to take care of people that own assets. Assets carry more wealth, and those are the people they're going to take the most care of. And that's the one thing people have to remember. If you can own it, yes, sometimes you might be, it might cost a bit more than what you're comfortable with, but that's an investment you're making for your future, and the government's going to protect that investment.
Absolutely. And the other thing too, like a lot of my clients, I do tell them, I'm not a financial advisor, but go to your financial advisor or your accountant, because I know when I bought my very first home at 26, I was like, this mortgage payment is going to be a little bit higher than, what I'm paying in rent. And so I was able to increase my number of exemptions, which meant I didn't get a larger tax return, come April or May, because I was getting a little bit extra of that money each month. Every pay period, I was getting an extra, $150, $200, which offset the difference between me paying rent versus me paying a mortgage.
Exactly. Your mortgage always pays you back, and that's the best part about that.
Yes.
And the one thing too, and that's the one day, and if you look at people that too, one day if I own my first home, then down the line I can also take that home, rent it out, go get another home, and start accumulating more homes, more wealth.
Absolutely. And that's because I am getting older now. I definitely want to have more investment properties because the investment property now that I have, there is no mortgage. So the money that I get off of it, it covers all of the utilities in my current home. So, when it's time for me to get to that mode where I want to start retiring, I want to have 2 or 3 other homes and have a certain amount of money coming in so that it's offsetting what I'm making as far as being out here working all day, every day.
Absolutely. You got to let your money work for you, but you first start owning the asset and make that first step to buy that home because, I've never heard anyone's ever owned a home say, I regret this. It's like this, it's always something when the flush of the day you sell, like, wow, this is fantastic. Let's get some more.
Absolutely. And it's making those financial decisions to understand that it is an asset.
Absolutely.
Buying, you go buy that new car off the lot, it depreciates immediately. And so you want to have those things where, if something happened and you needed, $50,000, $100,000 or whatever, you have something that is more feasible for you.
Absolutely. And that's one thing, I recommend anybody's interested in it, come sit down with me and Tanya. We can run through numbers, tell you what it looks like financially for you, the benefits of all this. We can't never look at a mortgage payment like rent because too many people make that mistake. Like when they play with an online calculator, like, oh, this is expensive. No, you're not breaking down the real benefits of this. Let's sit down with the professionals and actually break down the benefits for you. And you can truly see on paper what it does for you, not short term, but also the long term.
Absolutely. Well, Matt, I know you got to go because you're a super, super busy guy. Matt and I are going to be coming on doing a live on a regular basis, and we'll start preparing and letting everyone know so that we can answer questions that you may have in regards to your mortgage, what's going on with it, the benefits of owning a home versus renting and things like that. And so, Matt, like I said, I know you have to go. Thank you so much for being on. I'm going to stay on, and if anyone has any questions for me, I'll be here for a little bit to answer any questions that you may have.
And feel free to let me know any question I can answer too for you guys. I can always address them off camera.
All right. Thank you.
Thanks, guys. Always appreciate it.